US crude last week precisely behaved exactly the way as we expected. We discussed that 92.4 it must try to achieve, it will try to achieve, and then from there a pullback can be seen. And yes, precisely from 92.4 levels, it is reversed and closed the week at $90 levels. Yes, it has yielded a doji here. Now, what does this mean? What to expect from crude? Which position you should take trading oil next week? We will see with the help of charts, followed with indicators, and towards the end, I will give you the trading levels summary of the observation and the profit making strategy. Do watch till the do like, share, subscribe, and comment. Press the bell icon, which keeps you updated with the twice a day analysis, and join my free Telegram channel to get the live updates. Yes, your every like, comment, share, subscribe is a great inspiration, motivation for me to deliver on time every time to the best of my abilities. Let's start now. Now, look at crude on the weekly charts. We have been discussing this since long that yes, it has formed lower lows, and this time it is failing to break past the bottom of the channel and consolidating dating here. It is giving a breakout. Oil is going to rally, and I have been recommending buy since long on uh, crude oil since $70 levels. I have been recommending to stay long. Now, long time we have predicted that 84 once it breaches pass by we can see more bullish momentum, and then I will be looking forward to 92.5 levels. Precisely oil has achieved 92.5 levels. This is also the top of the channel here. Now what to expect from here? See, it has achieved this zone, it is still staying bullish. You can see rise, retracement, rise. Now it has yielded a indecision candle, a doji candle, where prices are not willing to stay bullish. At the same time, on the downside, supports are also very strong. Now see, after the sharp rise here, it is staying in this bullish channel. The top of this channel now at around 93.5 zone, and the bottom of this is at around 88-87 zone. Yes, these are great support. At the same time, look at the formation here. It has yielded higher highs, higher lows, bullish signals. At the same time, it has closed the week in red here. So possibly, see, the doji, if it would have closed in green, possibility of a rise would have been more, but right now it is closed in red, and hence we can expect a little retracement. How far? Yes, it can come down towards 87.6 or 87 levels, which are going to be great support for next week. Yes, it can yield a symmetrical candle here, opening from these levels, moving towards 87-86 zone, which are going to remain the great support for oil for the next week. At the same time, one must not forget that first it has to breach the stronger support at 89.2, then 88.6, and then 88. These three are critical levels, critical zone for oil for the coming week, and below that is only where bearishness may prevail. Else what we have seen, it has taken the support from the bottom of this channel. It can even reverse and yield higher highs here. The higher highs suggest 93.5, 94 zone can get achieved here. Yes, if it stays above 91, certainly that is the point above which more bullish momentum can prevail. 91 is going to be a great resistance. Beyond 91, we can look forward to 91.4, 92.4 zone, very strong resistance, and if it stays above, then yes, you can look forward to 93.5, 94 levels as the next resistance, and this may continue to stay in this bullish zone. Why there is a probability for it to stay bullish? Let's have a further detail. Now see, on the daily charts, you can look at oil staying in this zone, bottom of the channel, achieving the bottom of the channel. We can see it bouncing back. Now at the same time, one must note that on the daily charts, where this line is coming from, this is the same what we saw on the weekly charts at the top of the channel. This is giving it a very good resistance here. 92.4 is from the coming from the candles, but 91 is the level it needs to break past by in order to confirm the rise there on the upside. It is getting a very strong resistance here at 91, and hence if you see oil staying above 91 next week, then certainly the bullish momentum may prevail, but at the same time higher highs for this candle and a reversal can also be expected. So this is the zone where we are going to keep the maximum focus next coming week, that is 89 and 91.2 levels here. In between this zone is where we are going to focus, and we will observe how it behaves. The first trading candle is going to remain important. If it stays below 89, certainly you can say that it is willing to break out, and then I will look forward to this zone here at 87.687 to be breached. If these two levels are taken, then you can say that oil has reversed and we can see it to break on the downside, because see, coming out of the bullish channel, we can see a possible retracement. How far? You can note this. It can come towards the bottom of this channel, which is right now sitting at around 86 levels, which is going to be a great support here. So yes, 85.586 levels is what you can look forward to if oil resume its downwards move here. But whether it is going to do so, let's also have a look at the monthly. Now see, on the monthly charts, I have created this channel long time back. Those who follow me have seen this channel. Now see, precisely from the top of the channel, prices are retraced, and precisely from the bottom we have seen this bounce back. This is the beauty of analysis. This is the beauty of how charts can be so predictable, and how charts are so important. But right now, see, after weeks of consolidation, after weeks of bearishness, these are just four greener candles here, and this is the fourth monthly candle which is in green. It may try to see, if even if it has to give a breakout next month and continue its upward journey towards $100, it can try to leave a wick here on the upside on the monthly charts. So yes, a possible closure of the month at around this zone, that is 88.90, is possible. It can try to close the month at around this zone itself, 88 and 90. It can try to drop towards 86, 87, and then show a pullback towards the end of the week towards 88, 89 or $90 levels. Yes, probably it may try to close at around these levels. Now also one must note that, see, after the step, after the pullback, this is the first bullish candle, and any point of time, if the body size remains greater than half, the next monthly candle can also remain strongly bullish towards 95 and $100 level. But for the next week, it appears we may see a limited range movement, a range bound movement, where 92.4 certainly is going to be a very good resistance. Staying above 92.4, 92.5, you can look forward to 93.5, 93.8 levels as the next maximum stronger resistance levels. And looking at the movement, looking at the preceding bullishness, and if it has not to give the bullish candle next month, it may try to scale up the highs also. So yes, there are critical resistance levels which we need to focus upon, that is 89 and 91.2, and on the downside, in fact, 87, 86 levels are the maximum support levels. So these are the focus levels for the next week. Now let's have a look at the help of indicators on the monthly charts. Moving average is running parallel, prices divergent from the moving average. Signs of bullishness, now 80, 74 and 70. These are the support levels on the monthly charts. Right now, price is willing to diverge. It can continue to diverge for a couple of months before retracing towards the moving average. The stochastic is back to overbought levels on the monthly charts, and it can sustain here for a while. Look at MACD. This is willing to converge and cross over. Now let me show you something on the monthly charts. See the wave here. See the wave here, and now this is the time when oil is willing to converge, crossover. Now this crossover means a lot for oil, as this is the bullish channel in which oil is prevailing at least for next few months. Then it can stay bullish and it can come to the median levels at least, which suggests that possibility of further bullish momentum still prevails for oil here. If it crosses over here, certainly the bullish momentum is going to continue, and then 100, 110 or even double top levels cannot be denied. RSI is also seen rising. That is a good bullish sign. Now coming to the weekly. On the weekly chart, see moving averages crossing over here, all coming together at $80 levels. Now this is going to be the maximum support levels at $80. Also, if you look at the prices are divergent from the moving average, hence for a couple of weeks or more it can continue on the upside. Let the moving averages to come up, look upwards, and then it can try to retrace. So then keeping the base at around 84, 85 is what it will try to do. But right now on the weekly charts, moving averages converging here at $80 levels, great support, and this may continue to look on the upside. Stochastic overbought, has trying to cool a bit. It is trying to look downward. MACD is divergent. MACD is bullish. Candle size is still increasing but has flattened a bit. Also, if you look at MACD, MACD is coming from the lower levels and it carries a potential for it to achieve the double top levels, and hence this suggests that oil still has the bullishness intact here. Do not think of selling oil here. Possibly it may continue with the bullish. Oil can retrace towards 88, 84, 84 zone as well for next couple of weeks. Yes, a little retracement cannot be denied. However, it is still going to still remain bullish for next month possibly, and hence we have to watch out more carefully with the drop out there. I think as long as it is respected, it is still by the dip levels for oil. We can look forward for $100 levels and plus levels in the coming few weeks. RSI is rising. Coming to the daily. Now on the daily chart, see prices were divergent here from the moving average. Moving average consistently looking up. It has tried to converge. Now again looking upwards. Now moving average, 20 period moving average is sitting at around 88 levels, which has now become a good support, and this is going to be a critical support levels for oil at 88, 86. Yes, prices are divergent, moving averages are divergent and suggestive of bullishness. Stochastic has hit a bottom interestingly and now trying to recover. But at the same time, look at MACD on the daily charts. This is a bearish sign. Now see, first crossover, second crossover here. And that is why I say what has happened in this crossover, couple of retracement candles were seen. And that is what we had discussed in the weekly and monthly charts, that for next couple of weeks, we may see prices staying with slight bearishness. It can try to move towards 88, 86 or 84 levels with the slight and slow momentum there and with little swings. So yes, right now there could be little bearishness in oil in the coming few sessions, but there are great support specifically for next week. We have to look forward to 87.6, 87 and then 86 levels as the greatest support. I do not see it breaking below 86, and these are going to remain the greatest levels for next week. So be watchful, be careful, and in fact next to next week it can try to retrace further towards 84. However, largely it is still staying bullish. RSI has come out of the overbought zone here and trying to cool down. So now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategies so that you can trade profitably next week. And before I provide the strategy and levels, if you want to learn this art of trading, you should join my mentorship batch. The 26th batch is going to start on 9th of October. Equip yourself with the tools, techniques, and strategy which can help you become a profitable trader. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. First, let's talk about the observations here. Yes, oil has achieved the highs of the channel 92.4 critical resistance level and since then has retraced. At the same time, it has also yielded higher lows. This suggests that the bullishness is still, but on the daily charts, it is slightly become to overbought levels. On the weekly charts, yes, it is overbought, but and it is divergent. However, and it has still got room for it to continue with the bullish momentum, however not without a little retracement, and that is why I say possibly once oil stays below 89.2, 89 levels next week, more bearish momentum may follow, and then I will look forward to 88 and 87.6 levels on the downside, below which more bearishness may prevail. There are great supports on the downside as well. On the upside, beyond 91.2, 91.5 levels is where the bulls might try to take over, and then we can look forward to 92.5, 93.5 and 93.8 levels here. So now let me give you the trading levels here. This was the observation summary. First, let's talk about the levels to buy. Now, while talking about the levels to buy, yes, you can buy here at 90.6 levels, but then 91, 91.2 is the greater resistances. It has to stay above these levels in order to confirm the bullish momentum. Then I will still look forward to 91.5 and beyond that 92.4 levels. This is going to be the greatest resistance here on the upside. Beyond 92.4 levels, we can look forward to this time 93.1, 93.5 and 93.8. It has to stay above these levels in order to confirm the breakout, and then 95 levels is a must above this. Remember the fact that there is a still consolidation or retracement which can be expected in oil, and hence On the upside, we have to remain watchful, cautious, alert. On the downside, where to sell? I will look forward to 89.6 levels. You can sell here, but then 89.2 or 89, this is the first support zone. Below this is where bearishness may prevail. Still 88.6, 88, and then 87.5, 87. Now, if it drops, see on the downside, the supports are very, very strong. On the downside, the supports are very, very near. And thus, you have to keep booking profits and keep re entering if you see it trading in the same direction. Below this, we can look forward to 86, which is the greatest support, and then 84. Chances are less that it is going to drop for 84, but see, the faster the rise, the faster the drop. And yes, on the downside, I still see 87.6, 87 as a very, very good support, and then 86 level. These two levels should not be breached, and below this is where this is the zone which should not be breached. In any case, I do not see it getting pulled back towards these levels at least next week. Next to next week, probably yes, but that will be taken care in the next week's view. So trade accordingly, trade profitably, trade with a stop loss, trade with a trailing stop loss. Do like, share, subscribe, and comment. Join my mentorship batch or signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading week ahead. Thank you.